Hi guys, welcome to today's session. I am trying to load the live stream on Twitter so I can share it. So bear with me for just a second. Otherwise, there's going to basically be no people turning up today. Dun, 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 dun. Yeah, for some reason I can't see it on Twitter. There we go, got it. Welcome guys, welcome. Rob, how we doing, my friend? Hope you're all good. And Shabazz, how we doing? Hope you're all good. Right, there we go. I've got all the links sent out. Welcome guys to today's session. Once again, we are back, myself and Blayn, to go over strategy development. We're going to be taking a look at the charity Darwin that we've been putting together today as well. I am going to hand you over to Blayn now, but go easy on him because he's not feeling 100% today. So if he's a little bit slow or a little bit stuttery, that's why.
I'll try my best, but so on today's
correlation.
Pardon?
You won't be able to say correlation today.
We'll try our best. I'll probably get it right because I'll not be thinking about it. I'll probably be overcomplicating things. So yeah, today's going to be slightly different. We're not going to be building a strategy because what we're trying to do is just wait a little bit for more trades to be taken on the charity Darwin before we start adding another strategy, which we probably will at the end of this week. But what I want to do is kind of take you on like the sort of process that I would do when I'm looking at my own portfolios. So what I mean by that is today we're going to be looking at my live statistics on IME, and we're going to dive deeper into what I'm looking at. And something very surprising actually, happened the other day, which I couldn't believe it. I missed it. And look, you will miss things at times, but when you see it, you'll be like, how did you miss that? Yeah, it is pretty crazy. But we're going to just dive into the statistics, like what I'm looking for when compared to back tests and what I actually missed on one of these strategies. So everyone can see this. This is the MyFX book to my Darwinex live account. And we're looking back to February, from February last year. No, not last year, 2 years ago now. Wow. And we can see that the returns are good against drawdown. Like I'm quite happy with this. But what I do is, actually, I can see it on this screen as well. Actually, when I'm going to looking at an actual underlying strategy into how it's working, how is it comparing to the future? Like we all have the statistics from our quant analyzer in terms of back testing, like max drawdowns, stagnation period. I think I went over this last week. So if you don't know what I'm explaining, feel free to go back and have a look next week. But they're the two metrics that I mainly look at when seeing how performance of strategies actually holds. Because as much as we build strategies, we actually have no control or no idea whether they're going to work in real time. We can only predict based on how we are testing. And the way that you do get positive results is obviously robustness testing, which we've went over. So on my FX book, you're quite lucky is you can really dive deeper into your statistics of your Darwin as such. So you can just go up to here, like custom statistics. And what I was doing is I was going through them pair by pair, right? And what I'm doing is I'm looking at the underlying profit and loss of that specific pair. And if it we can then digest it by magic number, but we'll not go too far today. We're just going to look at something very simple, which is going to make a big difference to my portfolio, surprisingly. But, I was thinking about, okay, what is my best performing asset that I've been trading over the past couple of years? And I'm pretty sure it's quite a lot of other people's as well. So I was like, okay, let's measure how the performance has been on gold. So I wanted to see how the performance was. Let me just make sure if it's selected. Yeah. So I've selected gold, and what I've done is I'm analyzing gold. And looking back at the past 2 years, we can say we've made 12.33%, and we've had a 3.18% max drawdown. Now, I have had one of these strategies kind of on watch for a while because it's been sort of performing mediocre. And it's the reason that I've dived deeper into it the other day. And when I come across what I wanted to show you, it was quite stunning. And then we're going to take you further into how to actually implement these changes. So I was quite happy with the results because I've been getting a lot of the buys. Like, it's not been on my mind like gold's been underperforming, because gold has been performing pretty well for my portfolio. It's made up probably about a third of the returns. But what I wanted to see was, okay, how is long versus short? You know, because we've been very bullish, but I'd had a couple of trades not that long ago and it was shorts, and I can just remind in the back of my mind, like, shorts were my short trading for the past couple of months has been pretty terrible. So what I did is I took the buyers off, right? And this is quite crazy when you see this. My short trading in gold has been massively affecting my overall portfolio by quite some bit, you know, because the actual average strategies like drawdown has not been hit or stagnation's been hit for the individual strategies. I've not actually like removed one, but you know what we can see here is there's a problem. There is a problem here that I need to kind of rectify, because if we go on to the buy side, we can see a complete opposite story. We're up 17.86% with a 1.9% drawdown, which in the past 2 years is really, really good. I'm very happy with that. And because of the long side's been so good, that's kind of been masking the short side for me. So I've never really kind of looked into it, dived deep into long versus short, the way that I do in my sort of like robustness building as well. But it got me thinking, like, I would check this and everything else, but I've never actually checked it on gold, just because in the back of my mind, and this was probably really stupid of me, like, I was like, gold's performing well, don't touch it. We don't need to change anything in gold. And it was only when, you know, naive me didn't realize that my Darwin's results could have been so much better if I actually probably paid attention more to the things that are performing well and analyzed them exactly how I was for everything else. The good thing is we risk low amounts, so it's not like damaging the portfolio. And this is why I revert back to, like, low risk means you can make changes subtly. But this is a horrible looking back test curve. I remember showing you, Kieran, and I was just like, what the hell? Like, this is the worst result that I've ever seen on my whole portfolio. So I was like,
it's not a back test curve, is it? It's a live curve.
That's live. That's live data. And, you know, it's really tailed off once we got past this sort of like end of last year, like into this year. And it makes sense because gold's been going up. And I actually looked at the underlying strategy that I had. So let me see if I can pull it up. So when I had done my back test, this was the actual results of long versus short. It's this singular strategy is the one that's killing me the most. And I couldn't believe it until I looked into it. So this was obviously on my radar because it was performing, like, it's made money. The drawdown is not bad at 1.84. It's within the 2% of this strategy because it takes a lot of trades. But we can see that the profit factor is well below what I'd like, especially over a 2-year period. Like 1.09 is not good, and it's obviously been crumbling a lot more lately. So that got me thinking, like, how can we change this? Like, it's clear on the long side it's working very well. And just for a little bit of FYI, I've got about 4 different strategies on gold. So this is one of them. The other 3 have been holding up really well. This is an individual strategy. And this is why you need to be on top of your management in a singular strategy as well. So from in the forefront, like, the returns and drawdowns about 1-to-1, which is not the worst. It's well under what I'd like it, but sometimes we can go through these phases. So that got me thinking, okay, let's kind of do this manually as like a thinking from a manual perspective, right? And we can see we've been in a clear uptrend. So I have been getting kind of smoked on any sort of like pullback that my system would trade. And it's been kind of hurting the sort of like overall performance of gold. Not that it's bad performance, it's really good performance, but it could be better. And I think that's the thing. Like, you can always look at things and it could be better, but we want to do it in a sort of robust way, but we're not actually over optimizing to this period. So when I looked at my results prior to 2024, it worked fine long and short. Like there was no problems because we hadn't actually experienced this sort of parabolic move from the data that I've got until we went back to say pre-2010. So yeah, it was really interesting that like I kind of just ignored the fact that, okay, what if this happens again? And it has happened again, but we're capturing longs totally fine, but we're not capturing shorts. And this is something that's like quite interesting. Like people say, you know, simple concepts don't work. And I'm going to prove to you that simple concepts actually do work today. So, you know, if I was to ask you, Kieran, you know, what would people use for like a typical sort of trend filter? And you'd probably say moving average. Everyone knows that, right? So an institutional like sort of like moving average that everyone knows is a 200 moving average, right? And we can see that, you know, we trade if we're clever, we trade when it's above the 200 EMA longs, and we trade short when it's below the 200 EMA. And we can actually see when we zoom out that there is long periods of time where this will stay above the EMA, and going back to 2010. So this is what I'm on about. But we've not seen anything that's quite like this. But so I've tested everything in terms of like all the way back to this, and because we were moving quite, you know, it was moving to the long side overall, but we were moving like kind of like up and down. So at least since here, we've seen this massive surge and change. So first of all, what I did was I simply just added the 200 EMA as the filter. So we went from this sort of test. I can run it here now, but I already have the sort of results to back it up. And this is now, I don't know if this is very clear for everyone, but the test that I've just run here, this is what happens when you add the EMA, just for a filter to filter out long and short. Simple filter that's robust, that's for trend following. And we have now got a profit factor of 1.4. Returns have increased by 3%, drawdowns increased by 1%. So this is something that I've went back. I'm not going to bore you and test it all the way back to as far back as possible because it could take quite a while and it'll probably end up crashing the stream because of my dodgy connection. But what we can see here is it's definitely a lot better. So we went from a strategy that is still profitable, still like kind of churning along a good sort of like result overall. Like it's not the best, but we've now turned it back into with one simple filter into essentially what it would be class. I would say this is a beast of a strategy over the past 2 years. We've got our drawdown at 0.84 with a average return of almost 2.5, which is pretty crazy. So if I was, you know, I think the hard thing is to make this decision based on a couple of trades or maybe 100 trades. I wouldn't be able to make this decision, but when I've got, you know, since I made this strategy back in 2023, I've now got more data to then back up the idea of the EMA. So I have run it further back, and this does massively improve it. So yeah, that was one of the biggest sort of discoveries that I had doing my sort of like self-reviewing. It's why it's important to kind of move away from the shift of mind. Like once you've got one profitable strategy, you just let it run and leave it forever. There's always something that, you know, you could change without over-optimizing that can be tailored to the sort of market conditions of what's going on right now. But also from a standpoint of vice versa, let's say gold absolutely tanks to the ground and I'm taking buys, I'm not getting involved in these pullback buy positions because, you know, we've used that trend filter. And I think this is one of the way strategies that I actually have without a sort of trend or volatility filter. Like this is a very simple breakout strategy that trades almost every day. And because it traded quite a lot, I quite like the raw data that we got originally. not from the past 2 years, but the 2 years prior. So that's why I traded it live, and it was massive discovery. So changing this, we have actually erased probably, I would say, out of that 5% drawdown, hypothetically, probably erased 2 or 3% just doing this sort of thing. So yeah, that's I think we can see. Yeah, so there we go. This is simply like, and to put it into perspective, like kind of how simple this system is. Again, for those that have joined us over the past couple of weeks, I do like simplicity, and we've got...
Bro, what are those conditions all the way over there?
It's probably because it was on the laptop and then it's like switched back to the computer. I was not expecting that, but again, it does have some. I don't have those switched off actually right now, but that's just for charting. So literally all I've got is once a day I'm saving conditions for buy and sell levels, and this is just literally trading the breakout of this, the buy level with a EMA, just to prove that I'm not showing you lies. So yeah, and this is a crazy simple system that anyone could build. I would even challenge people that are in the stream today that you could go and research a gold breakout strategy and probably find, well, you got a condition there. What do you mean? But yeah, I feel like anyone could probably go find. It's a very simple breakout strategy, and this is what I love about the no-code sort of like area. We can build simple strategies. We went over one a couple of weeks ago, and it did work. But then you get some even simpler ones with less conditions, like this. And I can tell you that this is almost identical to the other system, except we're not looking at daily levels, we're looking at intraday levels. So there's just a little hint as to what this strategy is, because yeah, it's a very interesting one. Again, breakout gold before, we didn't have the EMA. Sorry, wrong one. So simply daily EMA for longs, simply daily EMA below for shorts. So very, very simple. And we're closing at the end of the day as well. So this is pure day traded, intraday day traded. For beginners, I would say kind of maybe stay clear of something like this to begin with. I would say the more that you can focus on the higher time frames, the easier it is to build and probably get results quicker than trying to build something intraday that might need quite a lot of changes, but also quite a lot of like if you're not used to taking trades every day, these sort of strategies could eat your psychology up quite a bit. But yeah, that's the basis of this learning lesson, and it's a good learning one for me as well, because as much as we've been trading a long time, sometimes I've clearly missed something here, which is shocking, but at least it's not actually destroyed anything at the end of the day.
Did you say you've got rid of the short side completely, or you've just put an EMA filter into short below?
So the EMA filter purely only trades when we're in a clear trend now. So this is something that I did
as well. You mean?
Pardon?
To the downside as well.
Yep. Yeah.
Okay.
Both sides. So it's only traded. So we could even put it into 100 and it'll start taking trades, or 50 or 20. But obviously, the lower the EMA, the less sort of significance it holds on a longer term trend.
Yeah.
But yeah, quite interesting. I think again, I do have filters on for the short side on dollar yen. It's kind of mediocre, but that's because we've not been. This is totally fine for me because we've got a couple of strategies that are in there that have been underperforming, but it's expected on certain pairs. Like you'll see equity curves health sometimes, yeah, like there's nothing clearly like we're not over the past 2 years we're not down. We're not at a crazy drawdown as such for the whole. This is like that's like 6 systems. So, but again, the buy side is really good. So 8.24%, 2.96% drawdown. So this is looking healthy. But these are the sort of things that you need to kind of look at when you're like comparing your live results to your back tests, and like this is why it's not just a place that you go and see your stats. Like it's not just a place where you can show your gain against drawdown. It's an environment. It's a really good tool that you can, especially with Darwinex as well, with everything that it shares in terms of your capacity. Your trade duration, the VAR, you can use that and really do like put 2 and 2 together to really kind of dissect and really be that sort of portfolio manager to get the best that you can. Because, just like an athlete, if they've got like a weak area, they'll work on it. And trading, I view trading as the exact same sort of thing. If you've got if something's not working out or something's not going quite as well as you wanted to in that specific area, we're going to work on it. The downside is athletes can trade on it and they'll get better. Where trading, you can over optimize it. So that's the one comparable that I would say is not comparable. But because you can. We could over optimize gold to the short side for the past 2 years and get a positive result, surprisingly. Yeah. But it's not going to hold weight in the longer term picture. So yeah, I think that's why we kind of have that process in place. So then we're making these sort of things.
I was saying to a friend earlier that when you're building a portfolio of strategies, it's going back to like the athlete kind of thing. I was like, you need to put yourself in the mindset of the manager of a football team, for example. Like each strategy will have down periods, good days, bad days. They will be a specialist in one area, but on their own, they're going to be pretty much useless. Like every single one of my strategies, I presume, unless I ramped up the risk and they had a good patch, would be useless. The same as Messi would be useless if he went and played Arsenal and it was just him playing, the whole 11-a-side team. And it's like you need the backup from all your strategies. I mean, it's completely off tangent to what you were saying, Blayn, but I think because you were saying it's kind of like an athlete, I thought it was an interesting. Interesting thing, and that I was trying to say, put yourself in that headspace where not every strategy has to be perfect, and you have time to adjust and amend because you're going to have basically a whole football team of systems that will be picking up the slack while that one is kind of underperforming. The same as a sports team would or an athlete would as well.
Yeah. Exactly.
I also apologize if my eyes are constantly off the screen. I'm currently uploading a strategy to the charity Darwin. So hopefully we'll
share the results.
Do what?
You can share the results soon.
Yeah, let me get it uploaded and then I'll share it. It's one built from Strategy Quant actually. A Bollinger Band breakout on. Oh, I've already put it in. Do I put it in there? S&P, yeah. It's a Bollinger Band breakout on the S&P 500 on the M15, which is interesting because it's something I want to trade more because in the next sort of year, I would like to start testing out trading futures as well at some point. And I think when I try and trade futures, I'll probably be focused more so on indices, maybe some metals as well, but I don't know. So I'm trying to get my head more in the indices space because I am very, very heavy on FX, and you are as well, Blayn, right?
Yeah. I mean, that's something that I've been working on the past, I would say, couple of months, is trying to get it's not like, I think the thing is, like, I'm not forcing anything, but I'm definitely testing quite a lot more around indices, like, and the two markets that I've found that are actually somewhat similar to the sort of conditions that we see in the yen sort of pairs, or like the gold is definitely DAX, the German DAX and the Nasdaq. Like there are clear markets that there is quite a lot of good explosive moves that as a breakout trader we could take advantage of. And I think I've not long uploaded a strategy to IME that's a Nasdaq strategy that I've been running in the background on. I can't even remember my other ticker of the Darwin. That's bad, isn't it?
Yeah. I've got them saved. Don't you worry.
my test account. Is it LSGT? I don't
know. Where is it? It's under silver, isn't it?
Literally, I just attached strategies.
XAQP and LSGT, yeah.
LSGT. Yeah. So I think it was on LSGT.
Gold, Blayn. Always in gold.
Yeah, LSGT is. Yeah. We'll see if we can creep up into that. I think I've still got like 3 or 4 months anyway.
Yeah, I think you got a few months left.
Yeah.
Is that the one you actually tell the story where you accidentally bought a booster?
All right. Okay. So wait, Rob's saying, are we doing strat analysis again this week? Today we're not going to. We were literally like that. What we just went over was strategy analysis, essentially, of my own portfolio of a singular strategy that was already proven. So rather than diving deeper into stop loss, take profit, optimization, this was strategy analysis essentially of before, like this is what I would regard as strategy analysis in a live environment, in terms of you've got your strategy, you've built it, you're happy with it, you're now trading it live, then we review it. So, it was clear that the strategy was like the long side's been performing great on it. As I said, it just kind of masked my whole sort of looking at both long and short. But it's clear that that was the strategy analysis of that singular strategy, Rob. That was purely looking at long versus short on that strategy and how can we get around like not taking shorts in a clear bullish environment, because like everyone can look at that gold chart, that silver chart, and we can say, is it bullish or bearish? No one's going to say bearish. It's bullish. Like, it is crazy trending. So why was I trying to short it? I don't know. Like, I guess, well, I do know because the statistics showed that it worked, but it's not currently working in this current condition, which can happen. And this is exactly why we have so many strategies. So then if one is really underperforming, like the strategy is not underperforming, the short side of the strategy is underperforming. And I think this is exactly why all of my strategies are long and short, because the long is helping the shorts not like collapse. So it's kind of keeping it within that sort of drawdown. So yeah, I hope that explains it. I like build in Dream of you guys. It's helpful. Yeah, next week we will be building another strategy. I just don't want to constantly keep building. So it's repetitive. So then we can actually touch on subjects like today that are very important, especially when you're in that live trading environment, when you've got that year track record. Like, what do you do? What is the process when you clearly see something's not working? What do you go and do? So that's the sort of like kind of lesson. I've tried to explain it as simple as possible today, but if you didn't get it, then let me know.
I think, Blayn, that the actual building of the strategy is probably the least important thing, in my opinion. Is like you get an idea and you can go and build it, and there's a million different ways to build things. Blayn and I build things differently. Rob, you'll build things differently. Everybody will have their own ideas of how to put something together. The real work comes in trying to break it and disprove the strategy before you set it live, whether it's with sequential optimizations, walk forward analysis, Monte Carlos, even just stress testing with different slippage, different amount, different commissions, all that sort of stuff, or testing on different time frames and different assets. That's kind of the that's the frustrating part in my mind, because that's where you kind of see whether all your hard work over the past few hours is worth it, or past few days is worth it. And if it is, you then set it live, or at least into a live environment, before you send it to your main portfolio. And that's kind of where the real hard work comes in my opinion, is where, like what Blayn is doing now, where he's going over his trades for the past 6 months, 12 months, 2 years, and going, well, this is how it's performed live. Is it in line with what I expected from my back tests? If it's not, is there a change to be made? You guys know from all the strategy development sessions that we've done in the past, or I should probably say Darwin review sessions at this point. I was always very strict on how much data you need to make a decision. As in, I always say, like, 3 months, I don't even want to see your Darwin, because you need time and you need trades. 6 months, depending on your trade frequency, you could potentially start implementing things. A year plus, great. But the great thing with what we have is, when we have a back test, we know what we're supposed to be or we know what we should expect moving forward. And when you get the live data and it's not in line with your back test, there's a decision to be made. This is the real hard stuff that you kind of have to learn on the job, if you will. Whereas building a strategy, I mean, Blayn, I don't know if you agree, but I feel like I've got lucky quite a few times putting some random things together and it works. That's kind of the easier bit, in my opinion. Whereas this is the important stuff that doesn't get seen.
Yeah, I would agree with that. But what I'm going to go back to is, you said, is it worth the time that you've put in to see if it works? I think it's always worth the time, because you're going to get to see something. Even if it doesn't work, it's better doing it that way than just sticking it in a live environment and you lose. So even losing strategies and you throw it everything at it and it doesn't pass your sort of like your box checklist, is a win in my eyes, because what you want to do is I would rather have 10 strategies that are past everything than 1,000 decent tests, so you want to, like, similar to what strategy quant does. We're really kind of just squeezing it in. If you get nothing, we move on to another day. We've done good work. We journal what worked, what didn't work, what it was that we were actually testing on. So then we can kind of get familiar with, certain markets have familiar like tendencies in a lot of the similar builds, depending on what it is. Like, so, we'll know pairs that we'll know when we look at a strategy, Kieran, we'll know kind of based on the logic what markets it will definitely work on or has a good chance of working on.
Mm-hmm.
So that's what I mean by it. Yeah, exactly. So you start to build a narrative. Like, it's always test everything, but you do start to build a narrative in terms of, okay, I've got this idea. I think this will work on this pair. Test that first. Obviously, you'd be surprised how many times you think that you're going to have something that's good, and then you're like, oh, but on trading view, I took trade here, here, and here, but I didn't take trades here, here, and here. That's because of natural filtration of your sort of brain that happens. But yeah, no, I think this is the most important part. Like, what you do live is what will reflect on your result. What you do in an instance like this is what will reflect the future. If I just let this keep going, I am literally losing money for no reason, essentially. I'm if I don't make changes and don't actually kind of react to the situation, that's I think reacting to something like this is one of the most important things. But if you look at, going back to what Kieran said in terms of 3 months, 6 months, depending on how many trades, I wouldn't look at it. We can see that in this test, we've got 374 trades in 2 years. That is enough data in my eyes, especially over a 2-year period, to say, okay, we've got, in this case, sorry, this is 0. So it would be a lot more actually if we run the original one. So we could have 100 trades to the downside in a 2-year period. And if it's clear, that's when, I would say it's enough data.
Have you still got your, can you open the full report in Quant Analyzer, the one before you implemented the moving average? Do you have that?
I will just run it now. and then I'll put it on Quant Analyzer.
I was going to say, because you can view your stats year on year, can't you? So you can see if if it's kind of based on conditions and it'll revert back to the mean, or you can see whether it's completely stopped working based on the historic analysis that you have. What I mean by that is, let's say back in 2018, gold was parabolic all year, for example. I don't know if it was, I'm just saying as an example. And in that year again specifically, you had the same sort of period where your short sides got smashed. But then through 2019 to 2025 or 23 or 24, however, the short side might have been what was keeping the strategy up. Do you know what I mean? So you can kind of like get an idea for that before even having to implement the changes or amend anything.
Okay. So I think you were wanting to see the report prior to 2024. Yeah. I don't think. I don't think I.
I wanted to basically see, has this happened before in a specific year?
Right.
Like,
okay.
Is there a comparable year to 2024 or 2025?
Not really. Not really.
No.
It's completely new territory.
Okay. Because that's one of the things that would influence me to make a decision or not. Have we seen it before? If we have, then I'd be less inclined to make any changes. But if you've never seen it before, like you say, but it's still profitable with a slight tweak, then I'd be more inclined to kind of take that leap and make a change.
Yeah, like if you just look at the chart on gold since 2024, it's not dropped below the 200 EMA since 18th of October in 2023. So we have been above that. Where if you look before, I think the last comparable one would have been potentially 2005, which I don't really have no one really has great data on these sort of things. But, again, we can visually, because I know the strategy inside out, visually I know that looking at the levels at where it would take the trades, it wouldn't work anyway. It's more, again, so there's 2010. So I actually do have data back to, not from there, but here. So yeah, I would say I could probably go back and test it between 2009 and 2011. And I reckon the EMA would definitely hold up weight there in this strategy. But the development of the strategy was from about 2015. And we can see that the shorts would have worked because we've got quite a lot of periods where we're below the EMA, but we're also got that sort of choppier price action. And it's just crazy here.
I mean, that chart is wild, man.
Yeah, exactly. So, but when I run a test earlier on to kind of test my data all the way back to 2017, and having the EMA did improve that as well. So it showed me that adding that simple sort of regime filter was robust enough to sort of make the change. Because
so it's not been short in 2 years then.
It's not been short in 2 years. Version. Yeah, it wouldn't be short in 2 years with this filter on the past 2 years. Don't get me wrong, like the returns are absolute stellar for the long side the past 2 years. We see we do see this on certain backtest reports. If we go back to 2020 or 2021, 2022 for yen pairs, long side is absolutely killing it. So it happens on everything. Even on euro dollar, like the past 2 years, I don't normally trade alongside that much unless it meets a certain regime. But it's been traded in dollar yen long and pound dollar long a little bit more over the past 2 years. So I definitely think it's well worth having these sort of things in because we don't want to be short. I've been short, like some of my strategies have been short in this move. It's like catching a sort of knife, which I didn't really analyze it because the data prior to this shorts were fine. It didn't go through the drawdown as it did since this move. But I think this is definitely why we trade multiple strategies, though, isn't it? So multiple strategies, different sort of markets, different sort of strategies, and a singular bad sort of, because you're like everyone that's going to build strategies, you'll have one that underperforms. Everyone will at some point. It's inevitable. You can't just, like, I would say, like there's going to be a period where maybe you'll find on XAQP there will be a strategy that you get rid of because it is not meeting your expectations and metrics.
Did you use custom analysis on my FX book to split the longs and shorts?
Yes.
Yeah, so if I remove buys, I'm only at 1.24%. Overall, remember, I run it at super low risk, so overall I'm up 9.4%. So out of the 9.4%, 1.24% is shorts.
So it's clearly showing a bias towards longs.
Yeah.
Obviously, that's based on the market regime that we're in some of the markets that we're trading.
Of course, yeah.
But you've not got a strategy that's doing -4% over the past 2 years. So, well, it's not the strategy; it's the one side. It's the one side.
I do think, even though I'm clearly heavily skewed on the long side, I'm not necessarily trading too many assets that are just green dildo up only. Some of that is attributed to gold, of course, but a lot of my trades are on, as you know, Blayn, dollar yen. I mean, again, I guess dollar yen has been green dildoing. Yeah, that's interesting. I didn't realize it was that skewed. I wonder if
it's something that I've never really properly looked. I've always looked at singular individual strategies as to return against drawdown, stagnation period. Never looked at both buy and sells, but again, we're crunching the data. If the data clearly states on that one strategy for me that something's got to change. You're eating up. It's eating away at your profits.
Where's it?
The good thing is, like, for the rest of my portfolio, I don't have that problem. So this is one strategy out of 30 that is causing me a problem in terms of that, but it's still made money. So it's a weird concept, I'm not happy with it, but it's still made me a return. It's a weird sort of like situation, but it's a change that I'm happy to make, because it's not gonna even from the long-term back test, it's still holding up. So it's not as if I've over-optimized. I've added one condition that is used worldwide across the board. It's robust in my eyes, and it gave a positive expectancy of a change. But yeah, I mean, you'll probably take a lot more longs on dollar yen, I would say.
Yeah,
but
I need to go through all my magic numbers. I need to look at what's performing and what's not.
Yeah, it's well worth doing to track individual strategies.
Well, you kind of need to, I mean, it's hard to. I remember when I did my Q3 review last year, or was it my Q4 review? It was one of the two. I think it was Q3 review where I added the spread filters into all the systems, and that took me. I think it took me all week. I was only doing a couple of hours a day, but it took me all week to do a full review of all my strategies because there's that many. And of course, it's worth it, but this takes time, man, and you can't rush it. You have to understand what you're looking at, and if you're running 30 strategies, well, guess what? You've got to analyze 30 strategies and make sure they're all performing.
Yeah, I mean, it's the most important thing to kind of keep track of, because there's no point keeping a losing strategy.
Yeah,
it's as simple as that. Touch wood, the strategy isn't failing. It's just failing on one side that could be. I would say it is optimized, but it's not over optimized. It's not like it's taking advantage of a clear sort of market regime. Once it calms down, maybe it'll change. But I think this is definitely where active sort of research, especially, one of the things that I think you were discussing as well is, we've got lots of strategies. Why do we not dive deeper into the singular strategies that we know are already working. Like, can we make improvements without actually adding or subtracting much? In a robust manner.
Yeah, that's something that I'm working on at the minute, is just slowly going through all what I have. Obviously, I'm building that many strategies on Strategy Quant anyway at the moment. I'm trying to proactively be like, okay, well, how can I make what I already have better? No history records. It's definitely taking a trade. Oh no, maybe it hasn't. I don't know.
Might not.
Yeah, I've got it runs on the weekly. It's a system on the Nasdaq. Maybe it hasn't taken a trade yet.
It's possible that it's weekly. I mean, it could be quite interesting exercise. As the charity Darwin builds, we get lots of trades that we actually analyze and manage these accordingly. Not now, say 6 months to a year's time.
Yeah.
And really show how we're going to go about it. Because, law of averages is if we apply 100 systems, you might have a couple that are, might have more than a couple that might not be holding up to what we expect. You just don't know. I think that's definitely one of the things. Like, you can build a strategy, back test it, and based on historics, presume that it's going to work. And I would say for the most part, touch wood, they have for a lot of them. But there is a strategy that I removed halfway through last year on pound yen that just didn't work. Just it worked. I traded it from 2022, 2023, perfectly fine. 2024 was in a drawdown. 2025 continued the drawdown, and reached new drawdowns, new equity low. So got rid of the system, and I can still say it's still kind of twiggling around. It's actually on LSGT because that's a way of me keeping track of, is this strategy gone, done, or is this an equity low? Or it gets me more data again on that singular strategy, because I'm happy risking it on such low risk on that account because it's kind of like test Darwin. But it also means that if things perform that's in my test Darwin, I can bring them across to IME. So I think it's very good to have sort of two portfolios. One is your sort of flagship. The other one is sort of like, well, in your case, you're running two different portfolios because you're running one that's purely on strategy quant, which is brilliant. I'll probably get to that stage as well, hopefully. Keep saying it, but
yeah, but I didn't realize at the beginning I was building. So how many strategies have I got on LVFZ now? So one of them's made on Profectus AI, two are made on FX Prima, and then 37 of them are made on Strategy Quant. Now, I would say out of the 37, there's probably 30 of those that will open a trade on Monday and run it till Friday. And I didn't realize that I'd left those settings on. So for the majority of the week, it's always just sat in trades, and then it's like you find out on a Friday whether it's been a good week or a bad week. So like, it's a very unique portfolio at the minute, and it needs to be. I think what I'm going to try and do is I'll do a Q1 review of those, and I will move some of them, maybe 5 to 10, to XAQP. And then I will build LVFZ into a second portfolio, and I'll get a third Darwin to then become a testing ground, just so that I split up those strategies. So I have some of the ones that will be a kind of more swing system and holding, because I don't have anything on XAQP that's like that will just swing and hold all week. So if I can get some of those across, and then some of the ones that aren't like that as well, that'll kind of be ideal, and then LVFZ will, be a backup. I also want to do that because it will help my capacity massively, having those swing systems in.
Definitely.
I think my capacity at the minute it's dropped back down again to like 30 mil. I mean, I don't know how accurate that is. I don't know, because it changes so often. Oh, we've hit the 200K mark. Boom. 200K investor capital. Let's go, baby.
Awesome.
200K. Bad boy. Yeah, 30.86 million.
Awesome. What's mine? I can't see capacity on this one, can I? No, I don't think so.
Nah, you have to go on Darwinex.
Nope. So look, let me see what the capacity is, and then you're going to be sharing that strategy in terms of the statistics.
What'd you say?
Are you going to be sharing the strategy statistics that you've applied?
Yeah. Let me just run to the toilet because I'm desperate. I drunk a whole glass of Pepsi Max. So I'll be back in. I'll be back.
Alright, I'll just kind of can I scroll this across? 2 seconds, guys. I don't think I can scroll that across. My capacity is 77 million. So yeah, and that's just because we're applying such low risk sort of strategies. But yeah, kind of lost what we're speaking about. Yeah, I mean, we can obviously just say that like that's why it's so important to kind of analyze your portfolios individually from like a singular strategy point of view. Also overall asset, you know. So like what I first do is I click on like the asset. So whether like gold, I was like, okay, how's gold performing in my portfolio? You know, that's what I looked at first and foremost, and then if we see something that we don't like, then we dive deeper. So I think like that's where I've missed the short side because I've looked at gold, I've looked at the singular strategies, like right, okay, they're all holding up, they're fine, they're profitable, but I didn't go deeper. And I think this is something that's kind of because I've never had to before yet. This is something kind of new to me as well, but it's a really good learning lesson for me as well to kind of okay, how can I change this, making it robust, but keeping it within my sort of parameters. So yeah, that's what I've shown today, yeah, hopefully next week I will find a strategy that we can again build. You know, Rob, you said you quite like seeing us build something out. So maybe next week I do build something out. Then the week after, again, we do the same sort of process. I'll show you how I optimize it. Hopefully we'll get something that's got a lot more trades so we can really kind of utilize Quant Analyzer a lot more than what we did previously, because it'd be really interesting to kind of use that to show you, you know, we've explained how we go about using it, but it'd be good to kind of show firsthand how, like show you like on the stream how we're using it, because it's such an important tool when building sort of strategies and, you know, elevating them and, you know, building them out. So yeah, awesome. Right, yeah, you've got your screen. I can see it.
I just thought I was muted. I forgot I was muted. I was talking to yeah, so before we wrap up in 5 minutes, I'll go through the strategy that we've applied to the charity Darwin. We've got quite a few systems now. Black, how many systems have you implemented, Blayn?
3 or 4. 3 or 4.
Oh. So I've got 6 systems. Blayn's got 3 or 4. So you can see I've got a CAD-Yen strategy, 2 S&P systems, which this S&P is the one that I built today. We've got another dollar-yen system, euro-dollar, the S&P, and another dollar yen system as well. This one was built on Perfectus AI. It's actually one of their templates. It's a fantastic strategy. We're going to be bringing on Max soon to do a live stream with us on one of these sessions. If you're not sure what Perfectus AI is, it's basically like FX Dreamer, which is what Blayn and I have been sharing over the past few weeks. It's kind of a competitor business to those. So that'll be really interesting to get Max on here. He's a specialist at building strategies, and he's also been a trader at Darwinex for, I think, over 4 years. And he's managing like $1.6 million in investor capital. So it'd be great to have him on these sessions and kind of learn and listen to him as well. So there'll be 3 of us to pick all 3 of our brains. So on top of these, because Blayn and I both access the same account, we just do it separately. These are the 6 systems that I've put on, and Blayn's are on they're on your VPS too, right?
Yeah.
And I think all of the trades thus far are from my systems. Is that right?
Yeah,
Blayn?
because obviously we were doing the Friday momentum strategy that have got 3 or 4. So hopefully Friday we might see some trades. But again, the problem is the low sort of volume of trades on that system is probably why I've not seen too much, which is why I want to maybe next week build something that's got a lot more trades, so we can actually see some more trades on the charity Darwin as well.
I can't even remember what was the email, Blayn? Key and Blayn or something.
I don't know. I can't remember. I've not logged into it yet. I only just put it on my VPS.
What is the email to? I set up a new email, didn't I?
Yeah.
It is. Oh, crap. Key Blayn. There we go. And then I can't remember what the password was. Let me try.
Great stuff.
Oh no. Let me check. I want to look at the metrics. Even though it's still in calibration phase. Yes, this session will be on replay. You can go onto our X or our YouTube, and like once the live stream's finished, and you'll be able to watch it from the start. Rob, absolutely fine. Feel free to message me. My messages have been like stacked recently. I've been like ridiculously busy, so I apologize if I'm not as fast responding to my Discord DMs like I usually am. I'm not ignoring people. I'm really busy, so I apologize for that. Luke Adams, welcome, dude. It's been a while since I've seen you around. Very interesting topic. Yeah, it's fun doing these sessions. I enjoy doing these, especially knowing that we're working on something that's kind of for the greater good at the end as well. In terms of the charity Darwin. Key Blayn. Did I sent you this on?
Yeah, I'm trying to look.
Here we go. I put the wrong things in. There we go. Boom. Let's probably save. Oh, it's not going to ask me. Does anybody else get these weird lines as well in the background?
No, I've never seen that.
I get it every so often, and then it goes after a couple of days. I don't know if it's from some extension that I have active. I'm not sure, but it'll go. I sent it to our web dev team before, and nobody else could replicate it, and I was like, oh, so I guess it's just me with a dodgy computer then. But yeah, I like the new calibration phase dashboard because it was changed recently, right? So we've done 33% of trading days, so only 5 out of 15, which means we're going to have another 2 weeks of trading. So it's not going to be active next Monday. It won't be active the Monday after. It'll be
probably March, literally the start of March.
Well, it depends.
Depends how many trades we have.
Yeah, it depends if it takes some positions this week, I guess. No, it's still going to be in 3 weeks' time, isn't it? Dali Buzarik, apologies if I butchered your name. Says I have on my Darwinex as well. So I wonder what it is. I have no idea. If it's affecting multiple people, it must be like an extension or something.
Yeah. I've never had it, but then maybe it depends on what browser you're on as well.
Yeah.
Try it on Google. Like.
I don't think it matters. Yeah, see.
Yeah, that's weird.
It's different on Chrome. It's like this. It's weird, man. In a couple of days it'll be gone. It's strange. Hi guys, watching from South Korea now. Pleasure to have you here, dude. Appreciate you tuning in. What time is it? Time in South Korea. 3 a.m. Burning the midnight oil. Okay, back to this. So we're 25% on the risk calibration. So the way this works, the risk calibration will take your largest position or your largest trade size, and it will use that as kind of a baseline. So as a very, very basic example, if I was to take a 10 lot trade, I would have to take 10 lots every time to fill one trading decision, which is therefore how your risk calibration stacks up. So if I was to go to 10 lots and then I drop my risk down to 1 lot, I'd have to take 10 trades before that gathered enough data to be classed as a trading decision. That's how it works. That's why there's sometimes a lag between your trading days and the risk calibration. So we might even be held back by a couple of weeks based on that. I think that's probably just due to the lack of trades it's took thus far. I mean, it's been active a week. It's only took 1, 2, 3, 4, 5, 6, 7 positions. Yeah, but that will increase as we add more strategies onto the portfolio.
Yeah. I'll eventually put you on liquidity. So
I'd be interested to see what's it. Do we show you deleverage? We do. So deleverage is really low. Wow.
Yeah, that's seriously. Geez, the multiplier is going to be times 5.
I reckon the multiplier will be even more so than that. If we go, the highest deleverage this has been is like less than 0.5. Take a look at, so XAQP is rising recently. It's probably because I turned my gold strategies off. That's probably suppressing my risk multiplier. If we go to Signal account, the average deleverage is like what? It shows up here.
2.
Like 2, 1, 2. Oh no, yeah, about 0.5, 0.2.
So this could be.
So it might be, yeah, you're probably right, about 5 times risk multiplier,
Yeah.
right? Probably about right. Yeah, which I mean, I guess we'll just have to wait and see. But anyway, Rob. So what if you accidentally take a big size one, but return small? So of course it doesn't matter if you're outside of your calibration phase. It will fiddle with your average value at risk and your risk multiplier. But in terms of like, I was talking specifically for the calibration days to trading decisions. So we used to say it's 25 risk equivalent trading decisions will fill up the 100% of the risk calibration bar. Now, the trading decisions is based off of what I said. If you took, it's all I'm not going to get too technical because you don't kind of need to know this in terms of you can just trade and it'll, for 9 times out of 10, you won't find an issue. Okay, meaning calibration. Is that the door? I'm going to send them away, whoever it is. Oh, no, it's my kids. I ain't going to send them away. I didn't think they'd be back yet. I thought we'd be back in a bit. But yeah, so, and then send it out. The notional value is always related back into euro dollar. So we measure the position size and then the deleverage that you take of your largest position. That notional value gets compared to the notional value in euro dollar, and that's kind of the baseline moving forward. So again, if you have one massive trade in your calibration phase, that becomes your new baseline, and you have to take that same risk again to fulfill the risk equivalent trading decision. So it's really important that you don't do that in the calibration phase. I did it before. If you remember, it was my last Darwin before I went went into XAQP, and it took me 6 months or 7 months to pass the calibration phase because I made that mistake. And I ended up closing the Darwin not long after anyway, because Blayn dragged me into automated trading and I've never looked back. Anyway, back to the point before we finish up. So the system that I've activated today, I've also put it onto LVFZ, is a Bollinger Band breakout on the S&P 500. This is the equity curve from the builder. This was, I did all my manual tests on this. I haven't put it through the retester yet on SQX. That's something I'll do when the builder's finished. But I just went and kind of tried to break it on external of SQX anyway. And then ran it. So the way I build strategies on Strategy Quant is I run them for 2 years, optimize them. Then I validate the thesis of the strategy for the remaining like 7 years. And then I'll take the whole sample period together and then not do any further optimizations. I'll just try and break the system from there, stress testing things like slippage, spread, commissions, trading different assets. So I'll trade on the Nasdaq, on the US 30, etc. And that was the final curve. It's not the prettiest thing, but the average loss is really, really small. So what I want to do is I want to see it trade live, and I'm going to monitor it whilst it's trading live and just see if it stacks up trading live. Like, because we never know. Blayn covered this earlier on in the call. You can do all these tests. You can try and break it as much as you want. You can try and refine it, optimize it as much as you want. You're never going to know how it truly trades until it hits the live market. So you can see like these periods here, all the losses are really small and it's just like super low volatility, but then it has these periods where it just absolutely rockets. So I'm curious to see if it continues that pattern live. If not, we'll dead the strategy and we move on. That's what I like about Strategy Quant is it's like a constant lab just churning systems out, and it's my job to find. I've probably made over 1 million strategies on SQX now, probably way above 1 million. Yeah, I've walked away with like 40 systems, 30 systems, however many it is. So it's constantly like there's a lab with some mad scientists just data mining, and eventually you come out with 1 or 2 profitable systems, but then you've still got the final test or the final hurdle, which is trading it live and seeing, okay, well, you did all this work to get to this point. Does it work? And so far my Strategy Quant systems are all working, apart from one that shafted me on LVFZ, but it is what it is. I think I covered that a couple of weeks ago, the gold system where it couldn't figure out the stop loss, so it just didn't place a stop loss and put me short gold. Firecries, do you separate your strategies with different accounts? I separate my portfolios with different accounts, and Blayn does the same as well. So we build a portfolio where we put a certain number of strategies within that. So my main portfolio, XAQP, this Darwin here, this has currently 30 or 31 strategies live. My second portfolio has about 40 or 41 strategies live. I think Blayn's is roughly the same, but we split those portfolios up, so they're running on different accounts. But my second portfolio is a testing ground for my main one, basically. I don't know if yours is kind of the same, Blayn.
Yeah. It's I hope like on the like the 0 it says Blayn test. So
yeah, it does though. Right.
So if people are like, oh, we want to invest in the Darwin, then it says Blayn test. It doesn't look too good.
Yeah, but I'll be buying into your performance, not your name. These lines are doing my head in. Oh,
yeah, I think we wanted to cover the story on this one, didn't we? So you'll see assets under management is 150. So on my first week here, obviously I'm trying to answer questions in the Discord, and someone asked if you could pay for a booster with a different payment method. So I completely forgot that my card is like linked to this account. So I pressed buy booster to try to test out to see if it came to like a field that I could enter different card details into. No. So I was like,
What Blayn is saying is he went balls deep with a big ass booster by accident.
What, it was like 20, 30k. I don't know what it is. It's like 30,000 maybe. I don't know. It's tiny.
He told me I was absolutely creasing. So I was just trying to test it out and he just bought it.
Lesson learned.
Future Blayn will thank you for it. You're surely in profit on that now though, right?
Probably about break even.
Okay.
That is what it is.
I trust you long term, bro. You'll get there.
Yeah.
All right, guys. Well, I'm gonna wrap the session up here because my kids are downstairs. I don't know if you can hear them, but it's about to get noisy and crazy, as I always say at this time on a Tuesday. Thank you all for tuning in, and for sending your comments or your questions in the chat box. Blayn, thank you as always. You're a massive help to me on these sessions, and it's great to have somebody here with me, pushing the message for us algo builders.
Absolutely.
Pushing forward and building strategies, testing them, breaking them, trying to build more, and yeah.
Exactly.
I'm tired. My brain is switching off now. I don't know how you've even got through this session.
I don't know. I'm surprised that I feel a bit better because I think my mind's completely off of it. I'm excited to speak about trading.
You need to celebrate with a beer and a football match.
Oh no beers for me. No beers for me.
Just the football.
Just the football. Yeah. Could be disappointing.
Right, well, I hope you have a fantastic evening. As I say, guys, thank you all for tuning in. It's been an absolute pleasure as always. We'll be back tomorrow at 4 p.m. UK time for the market overview session. So I will speak to you all tomorrow. Have a fantastic rest of your morning, afternoon, or evening, wherever you're watching it from. I can't even get my words out. I'm that tired. We're just going to cut it. Thank you all for watching. See you all tomorrow. Peace out, guys.